Hey folks, Dan Bird here for Wednesday, the 19th, NVDA Day, and the Bears are back. So is NVIDIA going to save the market today? We're going to find out after the close. But let's take a look at what's going on right now. I'm not a financial advisor, of course. So this is all for educational and entertainment purposes. Let's go take a look at the charts real quick. I think we had a little bit of a rally and then a give back, probably right back to where we started. We're at a very critical place right now, technically, on the charts, and I'll show you that. So there's the rally in the morning, right up until about 10:30, and that's when professional traders usually fade the market. So market was going up, so they faded to the downside. Right now, it's a little bit above the open, actually a little bit above yesterday's close, I should say, and maybe creating a curved bottom right now. But of course, we don't know that for sure until it actually happens. But technology is started off good, now heading down. Discretionary is coming up. Communications is heading down. So not really too much conviction. Not much is happening. I think everybody's waiting for NVIDIA. Staples is down. Utility, so all the defensive areas are down right now. Let's look at cyclicals. They are pretty much flat. Let's call it flat. They started off down slightly, pulled back a little bit, but again, pretty much flat. Not much happening there. The rotation area, growth versus value, started off the day pretty well, and it's hanging in there a little bit. Discretionary going up slightly, technology up slightly, semiconductors up slightly, transports versus industrials. This is Dow theory. I'm going to talk about that in a minute as well. Breadth. This is, by the way, this is not a 10-minute chart. This is a daily chart. So breadth right now, the percentage of stocks above their 20-day is at just below 30%. 50-day is at 36%. And 200 is hanging in there at 52, still above the 50% level. Bullish percent index is right now at about 40%. I'm going to look at that as well on some more detailed charts. Russell 2000, same thing, moved up, went right up to Monday's open, got rejected, pulling right back, sitting right on yesterday's close. And if you look at the Russell versus the S&P, it's pretty much flat. Everything's flat. So not much happening, not much conviction. Everybody's waiting for NVIDIA. Breadth, everybody here is below the 50% level, including the 200-day. It's now at 44% for mid caps, and small caps now look the same. And the NASDAQ 100, money flow, pretty much not doing much of anything, slightly negative. Again, had a nice run, had a nice little rally, better rally actually than the other indexes, right up to Monday's open, and then got rejected and pulling back down now. So we'll see how that works out. Advancers minus decliners is negative, and up volume minus down volume is negative. So again, and the VIX is pretty much flat right now. It went down in the beginning, came back up, and now it's flat. So no conviction. Everyone's waiting for NVIDIA after the close. That's going to either collapse or save the market. So here is percentage above the 200 now is at 48% for the NASDAQ 100. All right, let's go take a look at a few things over here on the left-hand side. Down here is the bullish percent index. Look at that real quick. You can see right there it's below 50. If it gets below 30, that's the point where reversals happen. It's not there yet. This is for the S&P. And here's the chart for the S&P. You can see now it's below the 21 and below the 50. So that continues to drop. It looks like it's might have a little bit of a rally here briefly. And then if we look at the NASDAQ 100, bullish percent as well. And on this one, you see we did get right down to 30. We didn't go below 30, but we touched it just like we did back here. And for going down, this actually hit 29 right here. And you can see there was a little bit of a rally in the NASDAQ 100 when that happened. So we may get a little bit of a rally again And it's really going to depend on NVIDIA, whether that continues or it collapses below that 30 line. Now, once it goes below 30, then we start looking for a bottom and see when it starts to reverse. That's where bottoms typically happen. So that's looking fairly negative. Let's look at the 50 and 200 moving average. This is a longer term view. You can see the percentage of stocks above their 20 has just been declining. You can see this started declining before the 50 and before the 200. So it started declining here. It confirmed the decline in July. The 50 confirmed the decline at the end of July. The 200 didn't confirm the decline until really basically October and November, right about now. But those are all trending lower, and they were trending lower as the market was trending higher. So that is a negative divergence. And this is the put call ratio. It is not yet at a point where we hit a bottom, but it's moving up, meaning everyone is becoming more and more bearish. Same thing with the NASDAQ 100. There's the put call, actually is even more dramatic right there. Percentage of stocks below the 20, you can see been downtrending and then accelerated here, right here at the end of October. Same thing with a percentage above the 50 accelerating and the 200 accelerating to the downside. So bullish percent index, of course, is negative right now as well. So it's continuing to trend lower. Let's take a look at the trend chart that's up here under this daily routine. This is trend analysis. I'm going to do it for the NASDAQ 100. This shows you the medium-term trend actually went bearish. First time it went bearish is back here on November 7th. Came back up slightly, and here's the price right up here. Came back up slightly and then went back below it on November 13th, so last week. And it is looking still very bearish right now. So it tried to make a recovery this morning, but it's still a red bar. So money flow is about to go below zero. So all of this looks pretty negative. The long term, of course, long term back here went below the line after the February decline. It actually went below the line right here, February 28th. But the medium term did so on February 24th. So it gave a little bit of an earlier signal. So this has already given the signal for a bearish move lower. What else we got? Let's take a look at market bias and look at the charts themselves. S&P. One thing that I did was this October 10th low is the really critical point. And you can see right now we're sitting right above the expected move, and options expire on Friday. So market makers are likely to keep it above the expected move so that these all expire worthless. That would be to their advantage if that happened. Be interesting to see how that works. This orange line right here is the October low. If we close below that, then it's going to be very rapid downtrend if that happens. But we could actually bounce back higher, briefly at least. We've got a downtrend in place. So if we do bounce back higher, I suspect that we will not make a new higher high. We'll watch for that. But everything is below the gamma line. This is the S&P. It's sitting right at the expected move. The put-call ratio are exactly the same right now, and we're below that. So that acts as resistance. So you can see we're kind of in between this ceiling and this floor right now, right in this little area right there. And NVIDIA is going to bust us out one way or the other. We look at NASDAQ 100. I put the orange line in here as well. It's sitting right smack in between the put-call wall. The put-call wall right now is almost the same, 24.5 and 24.6. 24.5 for the put, 24.6 for the call. We are sitting right smack in the middle of that. So you can see we tried to have a rally. So we've got a hammer from yesterday, and so far today we have a shooting star. So bullish to bearish in one day if it stays like that. We'll see what happens after the close today. Nothing's going to stay the same after the close. Incidentally, the RSI down here, the 40 level is where if we're in a bull market, bull trend, and the bull trend is holding, the 40 level is where we should bounce at. And we're sitting right on it right now. It's starting to bounce a little bit. If I go back and look at the S&P, same thing, sitting right on that 40 level with the RSI. And then we'll look at the Russell, which looks worse than the other ones, of course. It also has a shooting star right now. See if that holds. It's already gone below the October 10th low. So this one is already in a bearish configuration and looks like it wants to even go lower. It's below the 40 down here on the RSI. Notice the VIX right now. The VIX from today is a little lower than it was yesterday, but still it's at 24. So it's very elevated. So that's where bears are in control. And then finally, we'll look at Bitcoin real quick. Bitcoin continuing to go lower, about to break below yesterday's low. So that's not a good sign for Bitcoin. Right now it's below 90,000. I've been saying I think it's going to 80. So it may be heading there pretty quickly. Last thing, let me look at a couple of stocks that people asked about. One is VRT. This is a data center play for power and cooling data centers. It's actually in a really good spot, and it's sitting right on the 50-day moving average. So that's a critical point. That's a point where if the rest of the market cooperates, and you can see the momentum is still heading down, but on the MACD, it's moving up slightly. If we look at it right here, you can see it's right almost back to reversion to the mean at the 21. This could be a good entry point as long as the rest of the market cooperates. So we'll see if that is true. Next is BDX. Someone asked about this. This is Becton Dickinson. I'm going to look at this on a longer term view. This one is, let's see, this is in medical supplies, healthcare. Healthcare has been doing great lately. So right here, bounced off the bottom, 11.6, that looks like earnings. So earnings went all the way down, bounced, came all the way back up, sitting right on the 200-day. This is where it could get rejected and start to head back down again. We look at this on a weekly, so a little bit longer term view. You can see right there, that's the 50-week, which is that 200 moving average. And it's sitting right in the middle of its range. So can't tell you, the two green bars on the weekly, which is good, that's positive. But right now is going to be a critical point, whether it starts to move back higher or not. And then I don't know if I looked at coin yesterday. Somebody asked about that. Coin continuing down along with Bitcoin today, which you would kind of expect. So coin's not looking too great, as just like Bitcoin, also not looking great. And then before I leave, let's take a look at the market carpets. Google looks great. NVDA is coming back up. Broadcom, so all the big cap, other than Microsoft and AMD and Palantir a little bit, they are still negative, but the other ones are positive. Meta is negative, Amazon slightly down, Tesla's coming up, Eli Lilly still moving higher. So GE Vernova is in the top 10. Google's up there in the top 10 today. Broadcom. So some of the big cap tech names are actually starting to move higher. So we'll see what happens with NVIDIA. I think everything right now is poised. The whole market is poised to either collapse or rally, at least briefly. And what I've been saying for a while is that the market is going to move in a sideways pattern between 7,000 and 6,500. So somewhere, let's see how I want to do this. Let's call it, this will be good. Let's draw a box around that range. And I think it's forming a distribution pattern. So 7,000 is going to be right about up here, down to 6,500, which is right here. Basically the October low, I think. That's the key. I think we're going to run in this range until January. This is going to be a sideways up and down pattern, I think. NVIDIA is going to have a lot to say about that, but we'll take a look at this again and see what happens. So that's it for today. Thanks for watching. Hold on to your hats tonight. Oh, there is one more thing. It's on my list here. So one question on BDX was, is there accumulation? And let's look at one of my charts has accumulation distribution on it. This one right here. So yes, there is accumulation going on with BDX. Starting to pull back a little bit. It's pulling back though on very low volume. So yeah, this one with this big bar on earnings, this looks like it is being accumulated. Again, as long as the rest of the market cooperates, this might be a good entry point. But I'd be a little bit wary, a little bit cautious right now. The one last thing on my notes that I want to show everyone is on the homepage of the website. This is Dow Theory. Dow Theory basically says that if industrials are going up, then transport should be going up as well. That's the old Dow Theory. And this is available to anyone without a subscription. The old Dow Theory, I'll show you what it looks like right now. And you can see that it is, the industrials are falling lower, but transports are not. Transports are actually looking a little bit better than the industrials. That's actually a positive sign overall, even as we pull back right now. But then if we look at the new Dow Theory, this takes into account a lot of the digital companies. First, we'll look at the cap-weighted versus equal-weighted S&P. And what we'll find here is that the cap-weighted S&P is still holding up here. Here's that October 10th low. So cap-weighted is still doing pretty well. This is all those large cap tech names that make up about over 50% of the S&P. But the equal weighted over here, where you rate everything the same, is falling lower. It's already gone below that October 10th low. So that is not a good sign. Then if we look at the Qs, cap weighted versus equal weighted, same kind of thing. We'll see right here. Here's the October 10th. Came down and just barely touched it. This is on the cap weighted NASDAQ. But on the equal weighted, it's already broken through that October 10th low. So again, this shows you, this makes it really clear that it's those big cap tech names that are holding the market up. And they continue to do that. So if they collapse, if this goes below this October 10th low, then I think we're going much lower if that happens. NASDAQ 100 versus semiconductors. Semiconductors is the main sector or industry group in the NASDAQ 100. It's what leads things higher. Again, here's the October 10th low. Semiconductors are holding up pretty well. So this actually tells you that semiconductors is the industry group that's holding up the whole market right now. That shooting star really concerns me. If it stays like that till the end of the day, I think it may be signaling that NVIDIA is not going to have great earnings if it stays like that. So watch that through the end of the day. And then finally, communication services versus internet stocks. Internet stocks like Google and Netflix and Meta. There's so communication services has already fallen below the October 10th low, but internet stocks have not. So Google, Netflix is even starting to make a comeback, and Meta has been looking terrible. So it's really Google and Netflix that are holding this up. And this is the only one that actually looks positive of all of these that I've looked at. Number one, it looks more negative over here on the large cap names in that sector because it's below the October 10th low. But the internet industry group is not. So that's actually holding it up as well. So it's Google, Netflix to a degree, and the technology area that's holding this whole market up. We'll see what this looks like. I'll look at these again tomorrow. We'll see how it's either taking off or collapsing after the NVIDIA earnings. All right, let me know if there's anything you want me to talk about, take a look at. I hope you enjoyed the Technical Tuesday last night, and I will talk to you again tomorrow. Take care.